Zacks Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. This week we're screening out for bottomed out stocks. Now, I don't know exactly what that means, but Kevin Matras, who's the head of our Research Wizard division, will tell us, I'm sure. So, what are we talking about? Stocks that are takeover targets? No.
No.
We're talking about buy low, sell high?
Classic buy low, sell high. In last week's screen we talked about how to find stocks to short, the best companies that should, potentially make their way lower. But now we're going to kind of reverse course, and we're going to be trying to find stocks that have seemingly put in a bottom, companies that are either at their 52-week low or very near their 52-week low.
Okay.
And, last week has been a brutal week. In fact, this entire year we have been setting records on the downside. But, the market's not going to go down forever. And what we're going to be doing in this screen is we want to particularly try to find those stocks that are near their lows, that are finally starting to get recognized, because I think eventually, once we do hit bottom, we're going to see a lot of these stocks, we're going to see brand new leadership roles emerge.
So does that mean that these stocks have to be low in price?
Yeah, they don't have to be low in price, even though a lot of the stocks you're going to find nowadays indeed are low in price. They just have to be the cheapest they've been or near the cheapest they have been within the last 52 weeks. But again, I think one of the reasons why this is important is because there's a lot of stocks that have been bucking the downtrend, and a lot of these stocks are going to continue to do so. But a lot of these stocks, too, are probably going to start to go lower or fall out of favor. And again, as I was saying, you're going to see a lot of new sectors and a lot of new industries emerge in leadership roles. Perfect example is the healthcare sector. That has been an area of safety for the last several months, but last week we saw this dramatic unwinding. So that was the area that everybody was focused on. Now everybody is running for the hills. So as the market puts in these new lows and we start to see these stocks getting recognized, like I said, there is going to be new leadership roles emerging, and these are the companies you're going to want to focus on. So if you can get in low, the whole adage, buy low, sell high, this is a great way to do it. And
we're taping this on the 3rd of March, in case you wonder when last week was that Kevin was mentioning. All right, parameters going into the screen.
Yeah, check it out. We start this screen by looking at companies with a Zacks rank of less than or equals to 3. So again, you're looking at strong buys, and holds. And the reason why this is important is because if you were to look at the performance of the Zacks number 1 ranked stocks over the last, I think, 20-some years, the number 1s have shown an average return of over 26%. The number 2s have shown a return in excess of 16%, and the 3s have shown a return in excess of 7%. The sells and the strong sells, those have significantly underperformed the market over the past, so these are companies that we are excluding from this screen.
All right.
The next one is we're looking at the percent change in F1 earnings estimates over the last 12 weeks. We want this to be greater than 0. Now again, because we're looking at number 3s, we want to make sure that the analysts are getting more bullish on their outlooks for these stocks, and this helps make sure that that's true.
All right.
Next, we're looking at the year-over-year projected EPS growth rate. And again, these companies have to have a growth story. Without any growth, it's hard to make a case for any kind of sustained movement in the future. Then we're looking at basically the theme of the screen. We're looking at the ratio. Current price divided by the 52-week low has to be less than or equal to 1.2. So again, if let's say you are at a 52-week low, the ratio is 1. If you're, let's say, 1.2, that means you are 20% off of the low. We want to find companies that are either at the low, slightly off the low, or up as much as, but no more than 20%, because we want to find these companies that are still low in that price point, but we don't want them to be overextended on the upside, especially in this very, very difficult environment.
Got it.
Then we want the relative percent change in price over the last 4 weeks to be greater than 0. So again, the market has been going down. These companies don't necessarily have to have been positive over the last 4 weeks. They just have to have lost less than the market. And that's what this item means. And then all of these parameters are being applied to companies that are trading over $5 a share and that also have 100,000 shares traded on a daily basis or more.
So an example of a stock that came through the screen.
Yeah, one of the stocks that came through is a company called DTS Incorporated, ticker DTSI. They're a digital technology company focused on delivering entertainment entertainment through their DTS recorders, DTS licensed consumer electronics products, and DTS technology. If you take a look at their fundamentals, they came into the week with a Zacks rank of a 1, which is a strong buy. Their 12-month forward projected growth rate is coming in at 9.71%, which is very impressive for the kind of economic times we're going through. Their F1 earnings estimates over the last 12 weeks have been revised up by 2.31%, and if you were to look at their price performance over the last 4 weeks in comparison to the S&P, these guys are up 16% over the last 4 weeks, while the S&P was actually down 15%. And if you look at a chart, you can see that they're putting in a nice rounded bottom. And what's interesting is that the kinds of companies that are going to come through this kind of screen, you're going to see a lot of these different types of bottoming formations. V-bottoms, rounded bottoms, spike bottoms, double bottoms, this kind of thing. This, we have a nice rounded bottom. Stock looks pretty good.
Do you own it?
I do not own it.
All right. If you want to read about some other stocks that have come through this screen, get on over to Zacks.com and check out the text version of the screen of the week that Kevin has penned personally by his own hand. And even if you don't want to check out the other stocks that came through the screen, get over to Zacks.com anyway, because there's a lot of other interesting and helpful information that I'm sure you'll find there if you poke around long enough. And if you want to find out more about the Research Wizard, that is the software program that Kevin uses to achieve all of these screens. It's Zacks.com/Research Wizard that will take you right to that information. With Kevin Matras and the Screen of the Week, I'm Terry Ruffalo.